Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Wednesday, the 15th of June. Starting off with the FTSE 100 and below 6,000 and below that support from March 6036, which was expected to break. RSI support line broken, and that's why we could anticipate the downside. 58.45, that low in February, which looks as though it's the initial target here, could head as low as 5600 over the next week or so, which would be the floor of this falling trend channel from August, and early and end of day close really well above 60.36 or even 60.50, really delaying the downside scenario here for the index, with the interesting part here, the way that all the near-term moving averages are not now falling, including the 200-day line at 61.47. Onto the DAX, and this is, in fact, no less bearish as far as the price action is concerned. Quite incredible, this double gap down here after the trendline break from February. Very unusual for such a liquid market. So this really falling off a cliff here, reminiscent of that decline in the beginning of the year, which was actually probably a bigger gap, but only one gap. The view here is that 94.84 is the initial support here, and that would be tested almost certainly even if we go back higher. And then after that, looking at a possible gap fill from February down towards the 9,000 region. This stage only really back above the first gap floor at 98.19 would delay or even question the downside scenario. 97.37, another level in question as far as being old support, but top of the gap probably the most likely place as far as using money management on the bear scenario. For the US markets, still struggling here for the Dow, trying to hold this uptrend line from January, nominally around 17,700. Below that, one would expect a test of the 17,300 to 500 zone, which was May support. But at this stage, at least we're not any more bearish than that. For the S&P, also rather fiddly. This has broken an uptrend line from February. We've got a rising wedge bearish formation. The only question now is whether this market can reclaim or recover the 50-day moving average at 2076 quickly. So far, it looks like it has and wants to, or it will do, but we do have the issue of this line being broken from January. Below the 50-day average, risks down to 2015, even if we then recover after that. Onto the NASDAQ, here holding a line from February, perhaps helped a little by the Microsoft purchase of LinkedIn, but really the 200-day moving average at 44.09 was an initial support area. If that is broken on an end-of-day close basis, we would fear that this market's going to head up down to 4,300, and that would be the target for this for the Nasdaq, even if it then recovers the potential breakdown that we have within this post-November triangle. Onto the currencies, and obviously sterling in focus, given the Brexit fears. Below 143.50, risks down to 135 at the worst, which would be the floor of a November falling trend channel. Initial support here coming in at around the 140 level, 140.06, and one would expect the sterling to head down to that level, even if we then recover our composure over the run-up to the big vote next Thursday. For the euro, bearish as well, as far as going back down towards the floor of this triangle from the autumn. Probably still fear that there'll be a test of the 200-day moving average at 111 even if this market can then recover. Only back above 114, really outright bullish for the single currency. Dollar yen still holding on just around the May support area. 105.55 was the May low. So far we've been down to 105.62. So there is a possibility of having going for a bottom fish at these levels, but really only back above the 10-day average at 106.92, delaying the chance of a probe below the 105 level. Finishing off with gold, and here we see that still maintaining that rebound or the build from the end of last month, above the 50-day moving average at 1252, looking for 1300 and then 1350 over the next month or so. That's it from me. More updates at the same time tomorrow.